A very good afternoon to all of you. I'm Ankita Chauhan from NASSCOM Product Council. So today we have another enriching episode of our data science series to discuss the nuances of ML AI in tackling fraud in fintech lending. I have with me Ratnakar Pandey, who is currently India Head Analytics and Data Science in Kabbage India Private Limited. And he will share his knowledge and experience on how you can identify fraud in fintech lending using deep learning. You can write your questions anytime during the session. Ratnakar will take care of them at the end of his presentation. We will try to cater most of them, keeping the time limit in mind. Please provide us your feedback post the session to help us improve the future webinars. Over to you, Ratnakar.
Okay, perfect. Thank you, Ankita. So, guys, can you just quickly confirm whether you can hear me okay and you can see my screen? If you can just let me know on the chat window. Or
Ratnakar, normally, what is it is that the crowd, the audience are on the mute mode.
okay, that's fine. That's fine. So I'm assuming everybody is able to hear me okay.
Yeah.
If there is any problem, you can let us know, right? So, guys, in interest of time, we will get started. The 2:30 IST is the scheduled time, so we will move on with the agenda. So let me just briefly introduce myself and share maybe some useful links that may be useful for you down the road. And can I use the chat window, Ankita? I mean, how do I just send something to the participants? Oh,
Yes,
I won't be able
you can
to.
use it.
I can.
No, you.
I can.
Yeah,
Okay,
you
perfect.
can. Yes.
Okay, perfect. Okay. So, guys, my name is Ratnakar Pandey. I go by RP as well. I am currently heading the analytics and data science practice in a company called Kabbage. I'm sure most of you would not have heard about this company, or some of you would have, right? So, this is a fintech company based out of US. It's one of the most fast-growing company in the US, and I'll talk more about that during my presentation. And I've been working with this company for last couple of years, and particularly in the space of fintech and the risk and marketing analytics and all the associated areas, right? And a half years as a vice president and supporting more than $3 billion of business, both in the assets and the liability side, and across the different geographies such as North America, Latin America, and APAC as well, to a certain extent, right? So feel free to connect with me on LinkedIn. I am also very active blogger in Quora, depending on the questions and if I can be of any assistance, I'll be more than happy to talk about some of the things over there, right? So you can look me up on LinkedIn and Quora and see some of the questions that I've already answered. And I'm hoping that some of the questions that you may have from your side would be getting answered there in some of the write-ups that I have, right? So those are the two things. And then finally, I would also introduce you to my blog, which is under the name of datafy.com. And here I focus more in terms of, solving the real world problem using some of the Python and R specific tools, mostly in Python and a little bit in R, right? So you can go through all three of them. So just to really ensure that you guys can connect with me, I'm going to put the links out there on the chat window. And hopefully you should all be able to see this, right? So, okay, so Ankita, I'm not able to send to all. It will be only going to organizer and panelist. Is that okay? Okay, so I guess no point, guys, because somehow I'm not having the access to send it to everyone. But you these details, right? I mean, I'll be more than happy to connect with you and see how I can assist you in this journey, right? So now coming to the topic of the day, and I'm quite excited to be presenting this, and feel free to have your questions come in via the chat window at any given point of time. And as Ankita mentioned, we'll be able to take up those questions as and when they arrive or towards the end for sure, right? So the topic of the day is what are the different trends in fintech industry as far as the fraud related activities are concerned, and how does deep learning really play a role in this, right? And that is what we're going to focus in the next few minutes.
Nakar, I just want to intervene. I have given you the rights. Now you can chat with the audience as well. No issues at all now.
Okay. Okay. So perfect. So just give me a minute, guys. I'll just take those links and put it there, so you know where to look up these things, right? So I have the rights now. Thank you, Ankita. So this is the LinkedIn profile. Feel free to connect. And then obviously I was talking about my Quora profile as well. Yeah. And that is there for you as well. And then finally my blog where I talk about certain topics. So there you have it, right? So feel free to connect as and when applicable. Okay, so now going to the presentation and what we're going to talk about today. Before we move on, just a quick, disclaimer for you guys to take a minute to take a look at it, right? Nothing unusual about that. So this is purely for the educational purposes, right? If you want to find a direct application of any of those things, it may or may not directly fit into that, right? So you obviously are advised to consult with an expert and obviously, take it from there, right? So that's what we have. So now let's look into the fraud, right? Fraud, as you all know, and we in India, we are not, unaware of the fraud which happens across the different areas, right? So we're not talking about the fraud from the politics and all those areas. I mean, we have umpteen number of examples in that, right? But we're talking about the fraud which happen in the banking industry, and particularly what we call as a broad umbrella BFSI industry, right? So if there is anything which is not making sense to you guys or some acronyms that I'm using, feel free to stop me. So we are talking about the fraud happening in the BFSI industry, right? So just give me a minute. So this is banking and financial services, right? And within that, we have the fintech. Fintech is nothing but a fast growing area within the BFSI. It's more like a disruptor of the technology, right? So if you look at some of these pictures, I mean, the numbers are really very big. And if you do all of these numbers and if you add them up, it will be easily hundreds and thousands of billions of dollars across the world. And there's virtually no country where fraud does not happen, right? So this is not something that we in India or any particular area might be facing, but this is a worldwide phenomenon, right? So here's the flow discussion for today. We will obviously begin with a little bit about the Kabbage, then why particularly the frauds in fintech, what are the key sort of like, the differences or nuances in the fintech industry which makes it more exposed to the fraud, what are the different modus operandi or the MOs that we see in the fraud, and then, that's okay, we understand what are the different frauds, but why is it that the existing tools and technologies cannot really answer that, right? So we'll be talking about how a deep learning algorithm or sort of deep learning algorithms may solve some of the pain points that you're facing over here, right? And then I will give you a couple of suggestions, both from the supervised and unsupervised learning, in terms of, what are the tools that you should try if you haven't done anything in the fraud. I mean, these may be some of the things that you can try out and see whether they help address some of the questions that you may have, right? And then finally, I will show you a quick demo of a very simple neural network. I wouldn't call it a deep learning because I haven't added many layers, but that is on purpose because I just want to show you that even if you build a simple neural network, it will be able to answer a lot of questions without you being needing to do a lot of manual feature engineering and all of that, as we typically do in a machine learning algorithm, right? So this is the flow so far. Let me take a look at the questions and see if there's anything that is super urgent for me to address. Otherwise, we'll move on, right? Please, okay, so I guess we are good to go. Some technical issues some of you guys are facing. So if you have that, I'm hoping that I'm audible to the rest of the people. People who are not able to hear me or see my screen, just restart that and that may help you. Yeah. So let's move on, guys, and talk about the next few pieces over here. Yeah, Ankita.
Now,
Okay.
and all these issues, technicalities, I'll take care of now.
Okay, perfect. So let's look into the fintech, right? So I'm sure, a lot of you would have heard about this, and it may be a buzzword for you, and some of you may not even be aware of, what exactly this the entire fintech umbrella is, right? So this is really very, very vast, right? And just to give you some context on this, so the alternative lenders, right, or companies like Lending Club, Prospers, Opus, Kabbage. I mean, alternative lender was a term that people were using earlier, but now they're becoming more mainstream, right? So they're becoming as the first choice for the people to borrow. And there are very, very specific reasons for it. We'll talk about that as you move on. So that is one in terms of the lending, right? You obviously must be familiar with a lot of payment services that basically facilitate the payment from party A to party B, right? Or from the government to the consumer, or from the business to the employee, and so on and so forth, right? All these payment services also fall in the bigger umbrella of fintech, right? And some of the examples are Paytm, and Financial, Stripe, Square, all of that, right? There are services like Credit Karma, which is a multi-billion-dollar company. They advise their clients in terms of the investments, and they will actually give them the right financial product at the right time in their customer life cycle and the needs and wants that they have, right? Robo advisory is basically something that is very, very um, popular nowadays in the investment industry, where you don't have a live investment banker sitting with some of your clients, but there's a robo which is actually having an interaction with the people and advising them based on their financial situations, their financial goals, the time horizon, and so on and so forth. What is it that they should be focusing on, right? And a lot of cases, the customers who are talking to these chatbots or robo advisors do not even know that they're talking to a machine, and they're actually providing very, very valuable insights in terms of how to trade, right, or how to invest. And blockchain is probably the last one to join the party in terms of the fintech revolution, but it's a huge area. And I'll be doing a talk in the Data Hack Summit on the blockchain itself. But this is really a game changer for the entire financial world in more ways than one, right? And we'll be talking about that. If you look at how the market has shaped up, some of these numbers tell you the picture, and you can see multi-billion-dollar investment. The return on investment is quite decent by any standards, right? There are many, many deals happening throughout the world for financing the fintech companies and taking them to the next stage, right? Now, a little bit about Kabbage. So Kabbage, as I mentioned, is the company that I'm working with right now. So I'm heading the analytics and data science function, focused more on the risk and fraud teams, and obviously the next gen team that we're working on, right? Kabbage is one of the most well-known name in terms of the fintech industry in US and worldwide. We just do not have our own lending, but we actually provide the technology platform to companies such as ING, Scotiabank, Santander, and so on and so forth, for enabling them to really go ahead and have this product for their customer. And we have, some of the newer partnership with well-known names in the world like Alibaba, where we're actually facilitating the entire technology stack and making the lending easier for them, right? These are some of the accolades that we have received. So CNBC Disruptor 50 list, we have been there in the Inc. 500 list for more than 3 years now in a row. Forbes has rated as the most promising companies twice, right? And obviously one of the best places to work in the Glassdoor. So that's a little bit about Kabbage, the company that I represent, right? Now, let's talk about why fraud is such a big problem in fintech industry, right? Or why this is a bigger problem, let me put it this way, in a fintech industry as opposed to a typical bank setup, right? There are many, many reasons behind that, but some of the reasons I wanted to highlight over here. So the first reason is that most of the fintech companies will claim, or they actually have that as a service level that they're committing to their customer, that their loans will be approved within minutes, right? And within Kabbage, most of the loans, so north of 90% of the loans get approved within few minutes, right? Now, if you contrast this to a typical bank setup where you actually first go and say, I want to apply for a loan, they will say, what is the loan that you're actually looking at? Then they will have you basically fill out the forms, and then you have to make the multiple trips. The entire process takes, I don't know, maybe roughly 2 to 3 weeks typically in a bank setup, right? in a typical bank setup. I mean, they are also claiming that this is going to be more shortened, but as of now, I haven't seen that happening to a large extent. Now, contrast that to within the few minutes decisioning, right? That the fintech players are doing, because we are nothing but the data company. We are nothing but the technology company. We are very, very deep rooted in terms of leveraging those to our strength, right? Most of the applications which will be coming in the fintech lending company or the payment company or the deposit company will be on the web and mobile, unlike a typical branch setup for a bank where customer will come in the branch and submit the application. That does not really happen, right? Kabbage, to that effect, is almost entirely paperless. So none of the customers or the small businesses that we lend money to need to submit any paper in majority of the cases, unless there is some exception that we have to really get some more documents. We do not require any paperwork from them. So they have to just fill out the form on the web or on the mobile app, and we collect all the details and we connect to all the different data sources, and we are good to go forward with that, right? The third reason why the fintechs may be more exposed to the fraud is that we are more attractive for the people who do not have thick file or people who do not have a long credit history, right? If you already happen to be having, let's say, in terms of the Indian CIBIL more than 750, or in terms of the US FICO more than 700, there'll be plenty of people or plenty of banks out there who are willing to lend you. They may still not be able to do it within the minutes, but nevertheless, they will be willing to lend to you, right? On the contrary, there are a lot of customers who are not able to find the funding, and these are very good profile customers. And just because of not having long credit history, or maybe somebody who is coming to the credit for the first time, they are not able to find the takers for the loan, right? So we have a slightly higher exposure in terms of the thin file and new to credit, and it does not apply across the board, but in general, this is true about the fintech industry, right? The fourth point, which is probably the most important point, is that we are more prone to the invisible window, right? And what is this invisible window? Let me just explain, a little bit about that. So what happens is, let's say you are out there to borrow a personal loan or get a personal loan, right? And you go to bank ABC. Immediately you can go to bank XYZ and apply for the same amount to the other bank as well, right? Now, in the case of the regular banking setup, because they have a typical approval time of 2 to 3 weeks, they would get to know that you have made an inquiry in some other bank, right? And they would have this picture. Now, we as a fintech, when we are actually moving fast and we are saying that, this is one of the strengths that we have, we do not have that visibility. So you could apply to us and immediately you can turn around and apply to some other vendor, right? So when I'm making an assessment of, how much is your loan affordability or how much is the loan that I should give you, I am totally oblivious to the fact that you may turn around and very next minute apply in some other place. And that is also gonna eat into, what is gonna be the customer's paying capacity for our loan, right? So that is, another big risk that we are exposed to. The fifth one is, because the fintech players leverage the technology and the newer data sources much more than the traditional banks do, we are looking into the unconventional and evolving data sources, right? So, and there's always a risk associated with these new data sources. Obviously, they will tell you extra things about the customers or the prospects who are applying, but at the same time, there is something that you don't have a very long-term history on. So if you look at the entire social network, for example, that is not something that at least people from my generation grew up with, right? I mean, this is just in the last few years that people have become more comfortable. So if you tap into these non-traditional data sources, obviously the positive is that you get the information which is not there in the traditional data sources. The flip side is that you fully do not understand data, right? I mean, there's a lot of wrong information. There's a lot of garbage out there. So how do you actually handle those things to really come out with the meaningful insights from those non-traditional data sources, right? So these are some of the challenges which make the fraud even more interesting animal for the fintech players, right? So let me just look at the question very quickly, see if there is anything that has come up that I should address now, or I can park it till the later. Okay, so please share some resources on deep learning. I will do that in a minute, right, Pawan? Yes, I will be sharing the deck with you. So in fact, this is there on my slide share, and I'll be posting it on the LinkedIn as well, so you can find the deck there. Not a problem. Yeah. So let's keep going forward. I think there's no burning question so far on this. Okay, so this is very, very important way of sort of like, dissecting the fraud. So when we look into the fraud does not come in just one shape and color. It comes in many, many different shapes, colors, and contours that we are looking at, right? And this is one of the most popular way of dissecting the fraud. And it begins with, basically three angles, right? And what are those three angles? Let me just get my marker very quickly. So it begins with who is committing the fraud and how they are committing it, and then who is the victim, right? So basically, one is the modus operandi, the other one is who is initiating that, and then the last one is who is going to be the victim of that, right? So the first party fraud is when a person himself or herself or the borrower himself is actually going to commit the fraud, right? So when the borrower applies for a loan, he may have what we call as the ability to pay, that the person has the money and the resources to pay you back the loan, but the person does not have the willingness to pay. The person came in and applied for the loan, very clear from the day zero that I'm never going to pay back this loan, right? So this is what we have typically in terms of the first party fraud, right? And that basically manifests itself in various forms. The first one is the first party default or the first payment default, right? Sorry, not first party, first payment default, which is that the very first payment when let's say I've given you a loan for $200,000 and you owed us, let's say, I don't know, let's say $1,500 in the next month, right? As the first EMI of the loan, you never pay, right? So that $200,000 is never going to be repaid unless we apply the collection services on it, right? So that is what we call as the FPD. And there are some other modes as well, which are bust out, synthetic identity, and stacking. I'll be talking about that in the next slide to give you some view of what are the different MOs that we're looking at. Who is the victim here? Victim is obviously not the borrower, because the borrower himself has committed that crime. So the victim is going to be lender, and obviously lender will be able to retrieve a certain amount from it, but not necessarily the full amount in majority of the cases, right? So this is what we call as the first party. Now let's look into the second party, which is someone that the borrower knows, right? So it could be your roommate, it could be the the aggregator where you have provided the information. So let's say you went to some portal, you provided your information that you wanted to apply the loan, but then you change your idea or change your mind that you don't want the loan anymore, but the aggregator still has your information, and somebody from there can go ahead and apply a loan on your behalf because they have all the information from you, all the PIA information, your social security number, your Aadhaar, everything is with them for them to really go ahead and apply a loan on your behalf, right? So this is what we call as a friendly fraud. And because, you will be able to figure out who in your network has committed that, right? And the effect is both on the borrower and lender in this case, right? And the last one is the third party fraud, which is, probably one of the most difficult to predict, right? Very, very difficult to predict. And this is where you'll be dealing with one of the sharpest folks in the fraud industry, right? So when we talk about the fraud, people who are, doing the third party fraud, they are probably, very, very good at in terms of, what they're doing. And they have basically, they're running their own company of a sort, right? So you can imagine that this is obviously an illegal company, but this company may be having a bunch of people who actually find out the loopholes in terms of where I can go and do something, and nobody's going to be able to catch it, right? So here you have things like fraud rings, identity theft, right? They can go to even your trash bins and get the information from there. They will piece together all the things and apply on your behalf. Or they will also do what we call as the account takeover, right? So basically your information or your account with a particular bank has been taken over by somebody else. They will slowly change the phone number, the email, the residential address, everything, and you're totally oblivious to the fact that something of that nature has happened to your account, and that comes out as a shock to you, right? In this case, again, both borrower and lender have to pay a price for it, right? So this is what we call as a third-party fraud. Now, does it make sense? I'm hoping this is clear, right? What is BPS? BPS is the basis points, right, Pankaj? So when we say 20 basis points, so that's like 0.2%, right? So it's not that high. But the thing with the fraud is that even though this may not be a very, very high number, but whenever it hits you very big, right? So in terms of the regular occurrence, it's not going to be regularly occurring. So that's why you will be sort of like a little bit relaxed, but then the fraud hits you, right? Okay, so I think, everybody's okay so far. So let's keep going forward to the next one. And this is where I'm talking about some of the modus operandi, right? So for example, the fake account, right? Fake account could be where you have taken somebody's identity, you have stolen the identity, right? There's also a phenomenon called synthetic identity, right? Where you come out with the person, with the social security number, the residence address, the email, everything is there. The only thing that is missing in the picture is that is not a real person ever. This person did not exist ever, right? And this is all synthetic identity to really go and apply on basis of this person's credentials, right? We also may have customers who basically mimic the best customer behavior, right? And this is very common in the fraud, right? When you have fraudsters come in, some of these fraudsters will give you exactly the best profile that you want to have in your customer, right? They will be like shiny from all the different angles, right? And they will mimic that profile. They will have very high FICO or CIBIL scores and stuff like that. But the thing is that they are fraudsters. They are never coming in to repay you, right? So there's no willingness to pay, and obviously they have the falsified information. The next one that we have on the screen over here is stacking. Stacking is where, if you remember the concept of the invisible window that we talked about earlier, you will be taking multiple loans during a very short period of time, right? And what really happens is in one go, you can fraud many, many lenders out there, right? Because in that invisible window, I do not have the bureau picture saying that you have already applied for a loan in such and such area. So I wouldn't know what exactly is happening. And that will basically result into a deeper fraud, right? The last one is very, very interesting, the bust out. And these are the guys who actually really work very, very hard to build good profile in your books, right? So let's say you acquired a customer, and to begin with, you gave them a line of $5,000, right? Now the credit line of $5,000, right? You want to see, let's wait and see how these accounts are performing over a period of time. And they will continuously demonstrate a very good behavior, right? So for the next 12 months, I'm just making up some numbers here. So for the next 12 months, they will make the on-time payment. They will do exactly what we expect a good customer to be doing, right? So it's okay, you know what, this customer is doing quite well. So let me bump up the line to $15,000, right? And they will again continue their good behavior until they come to $100,000 line, right? So they have really done hard work to build their trust with you. And once they have built their trust and you fully trust these customers in terms of, yes, these are the good customers, then this is where they bust out. And you wouldn't find any trace of them, what really happened to those customers, because now they have really taken the maximum benefit from you, right? They could have cheated you with the $5,000, but that was too small a sum for them to really make a killing, right? So they will actually put the great effort and the hard work to really build this profile and go up to the max that you can give, or in terms of their threshold, and then carry forward, right? So these are some of the modes, guys, where the fraud demonstrates. I'm just giving you few of them. This is no way a very comprehensive list of all the frauds. At this point of time, if you are interested, I can tell you there is a link over here. This is a very, very comprehensive link for the folks who would like to read more on it. Hopefully it should open up very quickly over here. So this has a glossary of all the terms that you should be familiar with if you are working in the fraud industry, different types of, modus operandis, how do we track that? what are the factors and stuff like that. So do take a look. I'm not going to go through it right now in interest of time, but it is out there in the slide that I've shared with you. Yeah. So let's look at what is the current situation. How is it that the people are doing the fraud detection right now, right? So I broke it down to, for the sake of simplicity, in three main areas, right? So one is the intuitive, right? Obviously, this is how the banks have been operating for eons now, right? That they have been doing this thing day in, day out basis. The moment they look at the customer, they'll say, something is funny, right? Something does not look right. So they have this gut feeling, they have this sixth sense about something, right? And they will actually follow more their intuition and the manual review. And you need to have the expertise. So you would have done this like for years and years to really figure out whether this is the legit application or something which looks fishy, right? So this is what the intuitive process is, right? The other one is, which is a little bit more scientific, which is driven by heuristics, right? In this you have thumb rules, right? So for example, if you say that if I have, a particular person applying from Dharavi, right? So take no offense. I mean, I don't have anything against anyone, but let's say you have, an application coming in from, a slum area, right? And this person shows that I have the income of 50 lakhs, right? In reality, this may very well be the case because there are, multi-billion-dollar businesses flourishing in Dharavi, right? But I have created a rule that if I see an application coming in from a particular zip code or particular area, that is going to be more related to the fraud. So I will immediately transfer this application to my fraud team and say, hey, by the way, take a look, right? So let me know how it looks and what do you think about that, right? So again, this is driven by the past experiences, right? And it basically facilitates a quick decision making. So once I have jotted down the rules, once I have, really figured out based on the historical empirical data that I have collected and my peer group have collected and the third parties have shared with me, I can form those rules. Then I can give those rules to anyone in my team and they can run these rules all day long, right? But the main assumption there is that what has happened in the past will continue to happen in the future. The moment I change my pattern, the moment I start having a different MOs in the fraud, all your thumb rules will clear a fraudulent case, and yet you could have, a very big fraud case in your hand, right? So that is the flip side of that. The third one, which is even more scientific, is obviously the statistical process, where you may have, a time series that you're tracking over a period of time. You'll say, on such and such IP address, I'm finding a spike coming in, right? Or I am finding main applications coming in from these particular areas, right? Or something about that IP tells me it's blacklisted, right? And stuff like that. And you have those stuff like the control charts for each of the parameters that you're looking at. And the moment something goes outside those control limits that you have, you will flag it as a potential fraudulent case. And you will investigate, and manual fraud investigator will look into those cases and then clear either to be approved or not to be approved, right? So things of that nature really happen. Any questions, guys? So I'm just going to open up your questions here again. It is there, Aishwarya, in the presentation. I have this presentation on my slide share. So if you go to the slide share and look for Ratnakar Pandey, you will find this presentation and you can download this entire presentation, right? And all the links are there. And I will upload this in my LinkedIn profile as well. So either one of them will work for you. Okay, how do you check whether the customer is delinquent or not? Pawan is asking. What do you mean by outlier detection? Rahul is asking. Okay, so guys, outlier is, so let's say, you're expecting a certain phenomenon to be happening, but anything which is not in the pack. I'm just gonna give a very, very baby example. Hopefully that rings a bell to you. Let's say everybody in the class is getting, there's a quiz that you have conducted and everybody in the class is getting out of 20 in the range of 10 to 12, right? Because the quiz was supposed to be very hard. And there's this one person who got 20 out of 20, right? It may very well be the case that this person is actually getting the, the marks that this person deserves, right? But this is an outlier because clearly this has been flagged there, right? So those are the outliers and the limits that we've talked about. Okay. So why we are talking about the deep learning? So all the things that we have highlighted earlier, I mean, they all sort of make sense. So what is the need that is forcing us to think about the deep learning, right? And for people who don't know what is deep learning, I have another presentation that you can go through. But deep learning, in short, guys, is basically when you have neural networks, and there are many, many different types of neural networks, and you have deep layers in those neural networks. You have many, many hidden layers that are there. They become the deep networks. I'll be talking about some of them during the course of the discussion today, right? So the reason which is pointing us in that direction is basically what we call as the big data explosion, right? And people have been using this term for eons now. So I'm not gonna explain what is big data. But the big data explosion is, one of the sources there. And the other thing which is pointing us in this direction is the data exhaust, right? So there is certain amount of data that you on purpose collect, right? But there's a huge amount of data that is being generated as a byproduct, right? So for example, the customer comes to your website, applies for the loan, you obviously have the visibility of, what exactly happened during the application process. But I also have the cookies, I also have the tracking in terms of, what really the customer did in the web. I have this entire web log, right? How many times they have logged in, from where they have logged in. So if they say that I am, applying for a loan from Jaipur, but if I find their activity to be in Mumbai, right, there's something fishy. So all these data exhausts also play a critical role. And the traditional techniques do not have the capacity or the capability to handle the data exhaust as much as the same case is applicable for the big data as well, right? The other thing is when you have these numbers of features coming in from a variety of different data sources. So you have the data coming in from social, you obviously have your transactional data, which is already something that people use in big amount. You have unstructured data, you have, the smileys, the emojis, you have the pictures, you have the links, everything is out there in the social media. You have obviously your traditional bureaus, but even the bureaus, the data is also shaping up differently a little bit now. Then you have your vendors and your third parties who are providing you this data. You have your device and IP address. You have your geolocation codes. You have a variety of different things. So if you throw all of them together, suddenly you're looking at, thousands and thousands of features, right? Now, if I expect, anybody from my team to be going and analyzing these features manually and doing the feature engineering, they may be able to do it, but they will be able to do it in the next several months. By that time, whatever was the pattern in the fraud, things have moved on, right? So good luck. Whatever you have learned may or may not be applicable moving forward because the pattern has evolved, things have moved on. And even though you may have built a very good model with, very good AUC, KS, Gini, who cares? That is not going to be applicable right now. So the need of the hour is real time detection, right? And automated feature engineering. And that's where the deep learning algorithms really come in, right? One of the main reasons why the deep learning algorithms are gaining grounds is they do not need to be babysitted. They do not need to be told these are the features, right? And even more important is what they do in terms of the super variables, right? And that's where the flip side of that is also coming in, or basically the latent features, right? So when you throw some of these variables in a deep learning network, like a convolution neural network or LSTM, right? You don't really know what really happens in the hidden layers, right? So that's why it's called a black box algorithm, because you just don't know what features were created. But those are the features which will tell you the separation between the zeros and the ones much more better than your traditional algorithms like logistic regression or a shade or a cart would, right? So that's where the utility really comes in, right? The flip side of that is obviously, I know, some of you approached me earlier and you said that you are working with the big banks. The flip side of that is the providing the transparencies to the regulatory authority and the compliance authorities, right? But because you're not making a lending decision, we are not rejecting anyone a credit. We are, flagging a fraud versus a non-fraud, and that too will be investigated. We are probably a little bit immune to that high level of scrutiny, right? The other thing that you're going to gain if you go deeper with the deep learning algorithms is the consistency, right? So it's not like that one fraud analyst versus another fraud analyst. They have different criteria, they have different skill set, they have different experiences, they have different ways of looking at the thing. So there's inconsistency. All that inconsistencies and non-uniformities will go out of the window if you deploy these deep learning algorithms, right? So that's enough motivation about that. Let me pause here and see if there is any question that I need to answer right now. How much should be the data size to get accurate results from the deep learning? Parag is asking. Fraud has mostly unbalanced data. Don't you think boosting will be more effective than deep learning? Okay, Parag has second question there. How to recognize the bust out customer from normal? That's very difficult actually. Yeah. Please explain super variable a little bit more. Yeah, so super variable. So this is, I'll share one link. I have already put this on my slide share. This talks about, the deep learning algorithms, right? So one of the magic which happens in a hidden layer is because hidden layers are trained to separate zeros from the ones, right? Or if you have a continuous variable, they will be asked or incentivized to, find the distributions very accurately, right? So what really happens in the hidden layers is, so let's say I have my input layer, which is how a neural network look like, right? So I have input layer, and then I have many hidden layers in between, and then I have the output layer out there, right? Which is what is gonna spit out whether somebody is a defaulter or not, or fraudster or not, right? When you pass on the variables, let's say you have 10 variables that you're passing on, right? So those 10 variables are absorbed by the nodes or the neurons on this node, right? But then the weights of the input gets changed as they get passed on to the next layer and next layer, and then the results basically in terms of detection are forward propagated, right? Now what is going to happen in the next one is the error that you're finding is going to be backward propagated, and based on that these weights will be adjusted, the new features will be created, and the feature that you were actually thinking is going to look like x1, that is not x1, that has changed into something differently because that was married to some other variables and so on and so forth. So we really don't know, and that's why it's basically a black box algorithm. We really do not know how the feature engineering really happens, even though there are ways you can find the importance of the features, but how exactly this really happens, it's not very obvious, right? And that's where basically there is a little bit of the flip side that you're looking at, right? Just like a human brain, right? I mean, nobody has really figured out everything that a human brain can do, right? And it can store, I don't know, I think last I heard was 200 plus petabytes of information, which is many supercomputers will not be able to do, that a human brain can do. It's all because of the neurons and how they actually interplay and fire and get activated and so on and so forth, right? So with that background, guys, I'm gonna jump into the next segment because I am running out of the time now. So I'll give you some algorithms to think about when you have specific problems that you're dealing with. So when you want to find anomalies, I mean, a lot of people do, like I said earlier, you will have your limits, and you will have your thresholds, and if something exceeds the outliers, all of those things will be your traditional way. I would recommend you to also give a try to something called an autoencoder, right? This is very heavily deployed in areas like the image recognition and speech recognition and stuff like that. So if there is certain old image which was kept inside an area or got flooded, we can restore that image using an autoencoder, right? So what exactly it does is it will have the input as the input, and it will have output as the output as the input as well, right? So it's basically inputs are being told to recreate the output, which should look exactly like an input, right? So there is a encoding and decoding that really happens in between, right? And the reconstruction error, or RE, that comes in from over here will tell you the observations or the set of segments which are anomaly compared to the bulk of the population, right? So if I have to recreate this, I do not, let's say I have 1,000 data points, right? I do not need all of these 1,000 data points to recreate the input. I need only, let's say, 998. Those two who did not fit in the pack are gonna be my anomalous observation, right? So this is one of the things. And I have a link over here. This is the same case study that I mentioned earlier. So this is, some European card data where, I mean, we have, unbalanced data. So I think the incidence rate is only 0.12% or 12 bips. And we can, deploy an autoencoder to really figure out who are the fraudsters versus the not. And I'll be showing you this in a simple algorithm called the multi-layer perceptron, That is again a deep learning algorithm, right? The next one I would like to highlight in terms of the unsupervised learning is what we call as the recurrent neural network. Very, very important class of the network and very heavily used in the industry. Anywhere where you have the sequential data, like the speech recognition, right? So all the Siri applications or, the Alexa and all of that, they will be looking into some of these things in the background, right? Um, Now you may ask, how different it is from, the something like what we do as n-gram analysis, right? Where I have, certain words and certain dominance, and based on that, I can tell, what exactly is going to be happening there. The thing is that this is n-gram does not necessarily pay a lot of attention to the time or the memory of that. In this case, they have the memory, right? So for example, I have this sentence over here. The moment I say every, the algorithm will start putting some sentences or giving me some suggestion. Then I say morning, so it knows the first word was every, second word is morning, the third word is sun. With 70% confidence, I can say this is what you're looking at, right? And this is what they use in the autofill as well, right? So every morning sun, and I have provided this at time is equal to t, this is time t plus 1, and so on and so forth, and that will basically help me what exactly is it that is happening, right? Similarly, if I'm looking at the weblog data, right, I have built certain paths that the fraudsters follow, right, or certain behavior. It's more meant for the behavior analysis, certain behavior that the fraudsters really demonstrate when they are interacting with the app or with the website, right? The moment I see, these three boxes are checked, and this is a critical path where the fraudsters really go, I have very good reasons to flag it right there that this is a potentially fraud incident, right? This is a case study that I found on the net where I think they have, I think this is a German scientist, group of Germans, not German, sorry, my mistake, Japanese scientists who have built the LSTM to find out the fraudulent card activities. So in this case, I think people were using somebody else's card to go and make the purchasing. And they could really figure out deploying the LSTM on what exactly this is all boiling down to, right? So I'll leave it there. Quickly moving on to the next one, which is more graphical analysis. And this is, something that we all love in terms of the visualization. And the main, crux of that is that the birds of the same feather flock together. So if I can find the groupings of the people based on the attributes, right? And then we can find those networks and find the characteristics of the networks, then I can, even the customer who has not committed any fraud, but I know that this customer is related to a ring. So I know this customer is leveraging the same bank account that has been flagged in the past for a fraudulent activity, or this customer is friend with, I don't know, let's say XYZ, right? And XYZ is a known fraudster, and I can tell this information from the social media data and all of that, then I have reasons to believe that this potentially is going to be a fraud case in our hands as well, right? So that is the main approach there. And there are, this is not necessarily a deep learning algorithm. So T-SNE is a very cool tool to look into a multidimensional data when you're trying to visualize that. So, and break it down into 2-dimensional or 3-dimensional, and you can really figure out the patterns much more easily. You can tag those patterns and you can form your cliques and the link graphs, right? So this is also, one way of doing the unsupervised learning. Any questions on the unsupervised before I jump on to the supervised one? Can you please speak more about the LSTM? Okay, is fraud risk related with the credit risk? Should the credit score to be included? Parag says some examples of weblog data, how to decide which algorithm to use. Okay. Yes, Satyajit, that can be done as well. For the time series also, you can do it, right? And LSTM will be a better bet for the time series anomaly detection than an autoencoder, right? Now, the question is, what is, how much data is enough, right? So there is no magical answer, right? So anytime you're trying the traditional techniques, I'll suggest that you also give a try to deep learning algorithm. You may find the, better answer coming in from there, right? But this is the research that was done by Andrew Ng. And what he found out that when your data is small, your machine learning model will be behaving like this. I don't have that chart right now with me, but this is out there, right? And your deep learning models will not be too shabby and this is the amount of data that you have, right? But the moment the data goes beyond a certain point, the learning of the machine learning model tapers off, and the deep learning model, they just love the data, right? So more the data you throw at them, which is exactly the problem that we're looking at, right? That we have data coming in from a variety of different data sources, and we really cannot do the feature engineering ourselves, right? So this is where you will see the more bang for the buck coming in, right? Convolution neural network. This is, I have a use case here as well for the convolution neural network, and this is a, very complex algorithm, but one of the most powerful algorithms. So I wouldn't be able to explain you right now, but I have a link on my blog where you can actually go and see how a CNN really works out, right? But there are many, many layers. Basically, the convolution layer, and then there is feature space that is getting generated, and that feature space basically boils down to a smaller set of features to recreate that, right? Uber uses the convolution neural network for the fraud detection, right? So if you just type Uber fraud detection, they are using convolution neural network in a real-time basis to identify the fraud cases that we have, right? So I would request you guys to take a look at there as well. And the last one, which I want to spend a little bit time in doing the demo, it's a simple multi-layer perceptron. This is one of the most basic deep learning model. What we also call is a feed-forward network, right? And there are many ways of learning that, and there is science behind that, right? But the feed-forward network is one of the most basic type. And what we're going to do is basically look into the MLP, and I will give you a quick view of the case that we have. I do want to leave out some time towards the end to talk about any Q&A. So this is the data that we have from a real fraud case in one of the European banks. Like I said, the incidence rate is 17 bips, right? So the traditional statistical way of modeling, people will say you need to oversample, right? Or you need to do a SMOT, or you need to do some sort of sampling and stuff like that to really fix and work with this data, right? I will show you without any sampling, without anything, how MLP is able to really come out a very good precision and recall values, right? Total number of data points is this. There are 30 features. 28 of those are obviously masked features, encrypted, anonymized features, and there is a duration between the interval and the amount of transaction. This data is publicly available on Kaggle, so you can give it a try. I worked with Python, TensorFlow, and Keras. TensorFlow, for those who don't know, that is the engine from Google for the deep learning. They have made it now open source, right? Keras is a wrapper which sits on top of TensorFlow to take out some of the complexity, right? Because unless you are really an expert, we do not recommend that you directly go and work with the TensorFlow. There are a lot of parameters that you will not be able to optimize. That Keras automatically takes care of it, right? And then obviously all of this really happens in Python, right? So this is one quick example of how a traditional statistical model will be built, one feature at a time, right? So how a traditional statistics person will be doing that is, okay, I'm looking at this feature, which is called V22, right? And what I've done is weight of evidence, right? And looking into the weight of evidence and the KDE plot, which is the density plot, I'll say, I am not finding a different pattern. And also the WOE is not showing me the peaks and the valleys, right? So the WOE looks pretty uniform. So that means this particular feature may not have the explaining power, right? On the contrary, I have this feature, which is V12. I don't know what that feature is because they haven't made it public, right? And the fraud cases are in the red. The non-fraud cases are in the green. And here you can see there is a very good distribution in the weight of evidence, right? So this particular bin has higher and lower and so on and so forth. These bins probably can be combined, and that basically gives you the ways to combine the bin and all of that, right? We don't do any of that. So I will simply take this data, no pre-processing except what we call as the data standardization. This is a must-have, right? So you need to normalize or standardize your data because it learns from the stochastic gradient descent, from the slope that you're having. And if you do not fix the units, then the algorithm will not converge, right? Or it will give you some suboptimal performance, right? So here, I did not do any oversampling, undersampling. I did not do any variable reduction or principal component, anything of that nature. I only did the 75-25 split in the training and the test to validate, right? And this is a simple MLP, multi-layer perceptron model. It will take all 30 features as the input, and then it has 3 hidden layers, and there is a certain parameter that I have fine-tuned in terms of the epochs and all of that. And all this is there in the other document I mentioned in my slide share network, right? But these are nothing but basically how you would like to build your network, right? So these inputs are fed to 512 neurons. The output from there is fed to 256 neurons, and I have sigmoid as my activation function to really control when a neuron really fires up and when it doesn't fire up, all of that. And similarly, I have the decreasing number of neurons, and for ultimately I have the output layer where we are looking at that, right? The optimizers we are using is Adam optimizer to really find what is the closest path for finding the lowest error rate, which is what we are measuring in terms of the log loss, right? And accuracy also becomes a metric for you. There are other things like the dropout, which is basically trying to minimize the overfitment by randomly turning off, and I say randomly, this is randomly indeed, turning off certain neurons. In this particular case, we will randomly turn off 30% of the neurons to really make sure that we're not overfitting, because they have a tendency to overlearn very, very quickly, right? So that is basically going to account for it. So these are the results that we got from this. No manual feature engineering, no fancy oversampling, nothing of that nature. And this is the prediction of the fraudulent cases, right? So accuracy is 99.9%, which is no brainer because you had very low incidence rate. So even if I didn't build a model, I will have 99.9% accuracy, right? But these are the metrics that are really worth gold, right? So the precision and recall. So even with that low and incidence rate, I still got very, very good looking precision values and recall values. Precision meaning when I call somebody a fraudster or non-fraudster. In this case, I'm just looking at the one class. So if I call somebody a fraudster, I'm 77% confident that this person is a fraudster, right? Similarly, if I have 100 fraudsters in this data, I'm able to detect 75% of those fraudsters, which is what my recall is, which is also not too bad at all, right? And keep in mind, this is simple three-layer network. If I add the number of layers, I may actually fine-tune it further, and which is where I would sort of talk about the optimization, right? So I haven't done any of those things, so you have to fine-tune the number of epochs. Epochs is basically how many times your entire data will be forward propagated and backward propagated for the network to really learn. What is going to be the batch size? So basically each time in each epoch, how many samples they're going to pick and take forward in the network. Optimizer, there are many, many different optimizers to find the fastest path to the lowest error, like the stochastic gradient descent, Adam, RMS prop. Learning rate, if you learn too fast, you will find the suboptimal solution. If you learn too slow, you'll find the best solution, but it will take you months to train your model. Similarly, the momentum, how do we initialize the weight, all of that. What is going to be the activation function for the neurons to fire up, whether it's going to be the rectifier, linear unit, sigmoid, tanh, softmax, all of that. How many neurons you want to turn off, how many neurons you want to have in each of them, right? So this is where you would be advised to do a grid search in Scikit, or maybe do some DOE, some factorial design, find out what exactly comes out, and then from there you actually fine tune it, right? Okay, so I would end with the quote and then go to your question. So this is a quote from a very well-known writer. So he says, every morning in Africa, a gazelle wakes up. It knows it must outrun the fastest lion or it will be killed. And every morning in Africa, a lion wakes up. It knows it must run faster than the slowest gazelle or it will starve. It doesn't matter whether you're a lion or a gazelle. When the sun comes up, you better be running, right? So the gazelle over here is the good company. The lion over here is the fraudster. So the fraudster has to be he or she has to be only smarter than the least smart guy in terms of the lending industry, and they will make a killing, right? So if you're a company, if you're running your own analytical company, if you're in the lending business, the payment business, or any sort of things, you have to be the fastest because there are lions out there and you're a gazelle, right? So with that, guys, I will pause, and just one reminder, this is from NASSCOM. There is a next webinar happening on the 2nd of November by Mr. Ashok Muniratnam from the SAP. So he would talk about go-to-market strategy and planning. Now I would like to take up your questions. And Ankita, you can moderate as well. If there is any specific question that I haven't talked about, I'll be more than happy to discuss that.
Thank you, RP. So I guess you were giving answers to the questions all parallelly. That was great. So we can start with the question which you have left. I mean, the last slide you've started with.
Okay, the last one. Okay.
Yeah.
This one?
Yeah. Just a
or the
sec.
previous one?
Yeah, I was just looking at the question which just came up, before you started the last section of your presentation, because you were answering the questions, parallelly. So
Okay.
can you just help me out, RP, that the question which you catered to, the last question?
Okay, let me see. Can you tell how to consider categorical
I think this
variables?
was how to decide which algorithm to use. I guess this was the
How
last one.
to decide which algorithms to use? Yeah. So I mean, guys,
Yeah.
that's where I actually gave you some suggestions, right? But these are just my suggestions, and I'm sure if you do some more research, you may find some other answers as well. But these are very, very well established, sort of like rules, right? So autoencoders, for example, is great for anomaly detection and denoising the system. So I talked about that earlier, where you may have certain noise, so it will denoise and tell you what exactly is of material significance, right? So that'll be a good tool for your outlier detection. Your sequence analysis or the recurrent neural network, LSTM, is great for any type of log data, streaming data coming in, where there is no fixed length, right? So I mean, I can have 10 sentences coming in, I can have one sentence coming in, I can have an image coming in, I can have an audio file coming in. So it doesn't matter. I mean, it does not have any restriction on the type of the input, the size of the input, and the interdependence. So in fact, the inputs, if they're interdependent, that's even better for it, right? So I'll give you one example for this. For example, there was one good case where Indigo Airlines actually replied to somebody's tweet, right? So somebody said, thank you for delaying the flight again. I was late for my meeting again. And the MLP algorithm actually came back saying, you're welcome, right? So in this case, I can also, detect those things as well. And so, for example, I can say the food was good, not bad, or the food was bad, not good. If you're just looking at the n-gram analysis, they will be meant the same. But in LSTM, you will be able to parse out, which thing came first, and it will be much more contextual than other algorithms, right? The graph analysis, super important. You need to build the graphs to really understand what are those groupings that you're looking at, who is connected to who. Ultimately, the entire word is social network, right? So you need to find out who are interconnected. And this is particularly more relevant for the third party fraud, where there's a fraud ring which is going in the background, right? If you're a lone wolf, like the borrower first party fraud, then it may not be as relevant. But if it is a fraud ring, then you'll for sure find certain commonalities there, right? And these ones which I talked about, the convolutional neural network, the data has to be unstructured data, like the text files, the web logs, the images, and so on and so forth. It loves those sort of things. It does not need any pre-processing. It can directly chew on the images without any effort, right? MLP will be more your traditional data, but MLP can handle even the images as well, but not as good as what a CNN can do for you. Yeah.
Okay, RP, I was just saying that let's just have a last question, because looking at the time, it's already 2:30. So can we just have one question as a last question
Definitely,
before
yeah.
winding up? Yeah, so do you want me to read any of the question, or you want to pick and choose and then answer any of the
No, I think
question which
you can do that, Ankita. So you can tell me which is most common question that I haven't answered, and I'll be more than happy to jump into it. And guys, if
Okay,
I haven't, sorry, just one more thing, Ankita. So guys, if I haven't answered your question, I'll be more than happy if you just drop me a note later on LinkedIn or wherever. I'll be doing whatever I can to give you more context on it. Yeah. Go ahead, Ankita.
okay. Okay, so can we have this as a last question, where Siddhant is asking that, sir, please explain about reinforcement learning in lending and fraud.
The reinforced learning in the lending context, right?
Yep.
So one of the main salient features, Siddhant, from the reinforcement learning point of view is that, I mean, you really do not sort of like, have a loss mechanism defined earlier on. And it is a self-learning tool over a period of time. So sort of like, I mean, the analogy that people use is, let's say you want to train your dog to pick up the newspaper every day in the morning and bring it to you, right? The dog does not know this is what the expectation from me is, right? Like the algorithm wouldn't know what is the expectation from me, right? But you have a reward mechanism in place where you're saying, okay, if you do this, I'm gonna give you a reward. So I'm gonna give you a biscuit or like a cookie or something of that nature, right? If you don't do it, then I'm gonna, do a small pat on your back and say no, I mean, or just slap you and say no, this is not good, right? So same thing, algorithm is also behaving, but this is actually gonna be more hard for you to train. I think you're better off trying with some of the other algorithms first. Reinforced learning is very, very powerful, but it takes it takes longer time. It's harder to actually train for you. Yeah. Hopefully that gives you some context. Narayan says, where can we find the recording and the PPT? Narayan, it is there in my slide share. If you just look up me in the slide share, I have kept this presentation there. I'll also upload on my LinkedIn profile. So you'll have it there. Yeah. Ankita, any final questions before we wrap up?
I think now we should wrap up this session because there are a few more questions, but I guess if you're saying that the audience can reconnect with you over LinkedIn or over emails, as you have, you have shared your coordinates. So yeah, thank you so much, RP, for this wonderful presentation, plus the way you interacted with the audience, answered their questions there and then, really appreciate it. Thank you so much. I'm sure the knowledge shared will be used by them in their current as well as their future projects. Plus, I really liked your closing quote about that African, thing. That was great. And one more thing I also want to share with all the attendees that we have another upcoming webinar on one more topic, which is more than just chatbots fueling efficiency within your business on 25th of October, 3 to 4 p.m. You can register for the same by visiting the NASSCOM homepage and clicking on the third banner. Plus, I want to share our flagship event, NASSCOM Product Conclave, is coming up on 25th and 26th of October in Bangalore. Please visit nasscom.in/events and register. And thank you again, RP, and thank you all of you who have attended the session and gained something new.
Thanks, everyone. Have a good day.
Thank you. Thank you. Take care. Bye. See you all of you soon.
Bye. I simply end this, Ankita, or you'll do it from your side? Sorry. I'll just simply end it now. Okay. There we go.